Hi there, Serial Trader here. I'm going to do an update on the major US indices and lots of action this last week, so let's just get into it. Okay, now we're going to start on the SPX chart. Now what I want to do is just zoom out here, and you can see what I've done here on this RSI is I've got a horizontal line marking the low, okay, the low in RSI that we did here in February of 2020, right near the end of February 2020. Yeah, that was the last trading day of February in 2020. Now, why I want to point this out is because we're more oversold now on daily RSI than we have been since that point in time. And then now, obviously, that did lead to a much larger decline. But before that happened, we did get a pretty sizable bounce here. We, let's see, bottomed at 28.55 on SPX and made a high on the bounce of 31.36. So that is not an insignificant bounce, and that came from this very oversold condition on daily RSI. So now if we come down to, or sorry, come over to where we are now, we're not, hang on, we're not as oversold as we were back then, but we are getting close on SPX, and we're currently at 26.92, so just under 27 on daily RSI on SPX. And I think we're also within a different context. So that was the beginning of a much larger decline, right? What I think is we're about to finish an expanded flat ABC wave 4, and we are still holding above a prior support level as well. So I think the context of this oversold condition is just a little different this time. Now that being said, there are still ways we could allow for this to be the start of, the big one, the big crash everyone's been anticipating, but I'm not ready to go there yet. I just thought I'd point that out. And just to quickly get up to speed on SPX, so now we have taken out that prior A wave low, so this certainly satisfies the requirement of an expanded flat. Now, you might think, well, shouldn't an expanded flat be 5 waves down in C? This looks more like a 3-wave down move in C. Well, okay, if we go to the, let's say the hourly time frame, you can make a case that we got the 1, 2, this is the 3, 4, and then 5 down for C. Now the 2 and the 4 seem a little bit out of proportion, which I agree is a bit of a knock against this interpretation. But it's not that much of a knock against this interpretation, and I'll explain what I mean by that. So if we go over to the Nasdaq 100 NDX, and here's a similarly labeled price chart. So ABC down for A from the all-time high, ABC up for B, which itself was an expanded flat because the B wave made a move below the A wave extreme of the B wave. So ABC for an expanded flat B wave. Now look at this. This looks like a little bit better of a 5-wave move down. So we got the 1, the 2, the 3, and the 4, and the 5. The 4 is still big, but it looks a little bit more proportional than, say, it does on SPX. But nonetheless, I think you can get a reasonable case for 5 waves down in a wave C, as opposed to the other interpretation where it's only looking like, and what I mean by this is, okay, if we go back to SPX, the real bearish count or interpretation would be, okay, you somehow reason that this is the all-time high, even though it was made in a 3-wave move up to a new extreme, which is highly unlikely. But you would reason, okay, well, this is just the 1, this is the 2, we're in the 3, still 4 and 5 to come of a much larger decline to still unfold from there. I'm not ready to go there yet, but we have to mentally prepare for that scenario depending on how we bounce up here. But let's get to that in a moment here. Now, okay, how would I actually, well, you know what, we're not even going to go there as to how this would end here for the new all-time high. We'd have to do some fancy work that I wouldn't particularly care for right now to try and reason our way into this being somehow a completed top, the big top. So let's not go there yet until we're forced to. Because really, this looks like a 3-wave move up to a new high, classic B wave expanded flat, and C wave down. And I think we're getting close here. But okay, back to our oversold conditions. So I want to just jump back to that. So NDX, Nasdaq 100. So what I've done, so even though the S&P is not as oversold, quite as oversold, it's getting close as it was in that low in February, end of February 2020. So the Nasdaq 100 is. So the Nasdaq 100 in February of 2020 on the last day of the month there hit 27.98 for the daily RSI. Okay. Well, actually, the prior day it also hit 26.86, and then it actually closed slightly up. Let's see here. Yeah, it closed up like 0.3%. So that would actually be the low, is the 26.86. So let's just call it around 27 daily RSI, roughly speaking. And now where are we now on the daily RSI here on the Nasdaq 100? We are at 27.10. So we're right there. Okay, so we're essentially as oversold as we were on that initial leg down before the big March 2020 crash. So that makes me really expectant that we're going to bottom very soon here, like possibly Monday morning, even open down a bit and then recover, maybe close flat or up as a sign of some sort of a recovery rally starting here, relief rally. But that, comparable oversold condition definitely has me smelling a bounce, at least. Also, the Nasdaq Composite. So the Nasdaq Composite, similar pattern to the Nasdaq 100, but getting hit harder because it has, I guess, the higher beta names in it. The Nasdaq 100 has a little bit less volatile names, although it's definitely still volatile. But the Composite has all the junk in there too, right? So zooming out on the Nasdaq Composite. So where were we as the end of February 2020 came into play here for RSI? Let's see, 24.98 and 25.02. So let's call it 25 was the low in RSI before we got that initial bounce, before the March 2020 decline in the Nasdaq Composite. Where are we at now in the RSI? We are at 25.50. So again, basically right there, within a small margin of difference there. So that's what I want to point out. We are in the conditions to be looking for a sizable bounce, at the very least. And I would even still argue that this will actually be a important bottom, and that we're not done making new highs just yet. But we'll have to see what the recovering price action looks like. If we just start bear flagging and choppy and start failing at some fib retracements and start rolling over again, then I think we need to start looking a bit more, well, a lot more bearish, but not ready to go there just yet, okay? Okay, so also the Dow Jones Industrial Average. We are oversold here as well in the Dow Jones Industrial Average. Now, how does that compare versus the initial leg down in end of February 2020? So 18, 17. So the low was around 17 and change there. And I don't think we're quite there yet. We're only at 28.16. So again, the Dow and the S&P are less oversold than they were in that initial leg down, but both Nasdaq indices are right there. So that makes me really convinced that we're going to get a bounce real soon here. Okay, well, that's probably all I wanted to go through. Also, as I mentioned in the last video, we are now matching the time duration of the proposed second wave versus the 4 wave here. So the 2 versus 4 time equality I pointed out in the last video, we've achieved that as of Friday. So if we bottomed on Friday, or if we bottom early Monday, that would be a nice time signature. But we will see what happens come Monday. So I think that's all I wanted to go through here as far as the wave count and the oversold daily RSI conditions. Yeah, okay, so that's probably good there. Now, if we go over to the Thinkorswim candlestick charts, we've lost a 200-day moving average here on the S&P, but you could easily just recover it quickly here. But if we just keep closing below the 200-day, that's obviously a major bearish technical sign. We are oversold on my stochastic oscillator here. We closed right near the lows of the day, so that does suggest a lower open, even if we are going to recover on Monday. Suspect a little bit of a gap down open, and then possibly start the rally recovery from there. Weekly chart here on the S&P. The 50-week simple moving average is coming into play a little bit lower at around 43.49. We also have that prior October 2021 support coming in at 42.78.94. So with these extreme oversold conditions and a big prior support coming in there, I think the focus, even if we go a little bit lower here, that's really the message here. Definitely focus on the bounce, and then once the bounce unfolds, whether you want to play the bounce or not to the upside, that'll give us more information as to what we should be thinking here. But I'm still trying to be optimistic that this is just the 4th wave expanded flat, and there's still one more wave to go. Prepared to be wrong, though. Prepared to adjust to a more bearish tone if necessary. Okay, so that's the S&P, Dow Jones Industrial Average. Also lost the 200-day simple moving average, but we haven't actually gotten down to that prior low as we did in the S&P and the Nasdaq. And that would come into play at 34,000. Let's just call it 34,000 because it's slightly above that. So we might spike that early next week, maybe. Or if we hold it, we could still have a potential running flat where the C wave does not go and test the A wave low. We're oversold on the my stochastic oscillator on the Dow. Weekly chart. We are also through the 50-week simple moving average on the Dow, so a little difference there between the S&P and the Dow. Okay, over to the Nasdaq Composite first. Nasdaq Composite, obviously weaker, well below the 200-day simple moving average. Oversold on the stochastics. What else? Obviously closed near the low of the day. Weekly chart. Well below the 50-week simple moving average. So Nasdaq Composite definitely looking ugly there. And okay, we'll go over to the Nasdaq 100. So Nasdaq 100 below the 200-day simple moving average, and we are below the. Actually, no, we're not quite there. So this is the October, early October low. We've so far still held that in the Nasdaq 100, although it looks like we're getting real close to touching it, and that level is 14,384.93. So that might be an area to just spike down and then begin to bounce from, since we're so close to it already. And we are expecting a potential little bit of a lower open there on Monday. Okay, so that's the Nasdaq 100 daily. How about weekly? Weekly, we're also currently below the 50-week simple moving average. Okay. So things definitely aren't looking too pretty here, and we need a considerable reversal to start getting that bullish count some traction. Okay, so the VIX. Here's what I wanted to point out too. So one thing that makes me a little hesitant to think that we're just beginning the big one here is, okay, even though we've made a new low in the S&P relative to the early December low, here's the VIX high that accompanied that early December low in the S&P, the proposed A wave low of the expanded flat. So we're well below the VIX peak, even though we're below the price level on SPX. So that would actually be considered a bullish divergence where, okay, even though price of the index, being the S&P 500, made a lower low, we've made a lower high on the equivalent VIX level, okay? So if we were really starting to break down in some explosive move to the downside, I suspect, or I would think, or I would anticipate that VIX would actually be making new highs along with the indices making new lows, and that's not currently the case. In fact, we're quite far away. So far, we've only spiked as high as 29.79 compared to the prior spike of 35.32. So keep that in mind. Definitely want to point out that potential bullish divergence on those VIX spike peaks there. And the VIX VVIX tool, not a whole lot to point out other than a potential divergence between VIX and VVIX measured from this reference point, where, okay, making new highs in VIX relative to that VVIX high, but VVIX making a lower high relative. So a bit of a VIX VVIX. Let me just get this horizontal line up to show you that. So these equivalent levels on VIX and VVIX, when they happened, we're still below that level on VVIX, but above that level on VIX. So that's potential divergence between the two. And then, of course, that's just a small ingredient. We have to get the VVIX back below the red moving average, have to get SPX back above the blue moving average. So a lot of work to do to actually trigger a buy signal here. But just pointing out a potential early sign of that. Could certainly get erased next week upon further weakness, but we'll see. Okay, also, I think I went through most of what I wanted to there, but let me have a look at a few other things. Okay. So if we're about to do like the big crash, where we have a multi-year high and we're going to drop 50+% on the S&P, you would want certain stocks to look like they have the potential to do that, certain important stocks. So the FANG stocks get a lot of attention. Well, here is Netflix. Okay. And if you look at Netflix, let me go with a weekly chart here of Netflix. This looks like something that could be starting a major, not just correction, but crash. Okay, so Netflix is down big. So if the S&P started looking like this, I'd say we're in the big one. But Netflix looks like this already. Okay, but that's just one company. What about Amazon? So Facebook, Amazon, Netflix, Google, Apple, you know, the FANG stocks. Let's look at Amazon. I think Amazon's starting to look pretty bad too. Okay, not as bad as Netflix, but I mean, you can argue might have a pretty significant top in place here, and maybe we're starting the big one on Amazon. So that's two that have the potential, at least the chart potential, to look like they're starting a big decline. What about Apple? Okay, Apple, yeah, it's going down, but it's not looking that bad just yet. Okay, nothing like Amazon and Netflix as far as looking like the big one has started. Okay, how about Facebook or Meta, if they like to be called that? I'll just call them Facebook because that's what they are. Facebook doesn't look as bad. This looks like more of a corrective type of move to me than a crash. Although that could certainly change if we start accelerating, but doesn't look like Netflix or Amazon as it currently stands. How about Google? Google, okay. Google also doesn't look too bad. Looks like more of a corrective move to me. Doesn't look like the same kind of crashing action as Netflix and possibly Amazon. So we looked at Facebook, Amazon, Apple, Netflix, Google. That's basically the FANGs right there, the FANG stocks. Some people would argue there's some other ones in there too to include, but so again, this gives you a mixed picture. Some of the FANG stocks look like it could be the big one. Some of them don't yet. So I'm going to lean towards, now we only get probabilities in this world. We don't get certainties, especially in the market. I'm going to lean towards this being near the end of a corrective move, at least at the index level, and that we still have one more, you know, significant large degree wave up to come. But prepared to change my mind since there is some mixed messages here from a couple of the FANG stocks, and we are approaching those oversold levels that accompanied the initial leg down on that last major drawdown in spring of 2020. So that being said, bottom line, I would look for a bounce early next week, and then let's assess what the bounce looks like before we start deciding to get way more bearish or starting to enforce that we should get mega bullish again for this next impulse wave. As far as me, before I add anything to my long March futures position on ES, which I started making, I started small too, and good thing. Before I add to it, I want to see nice signs of reversal and maybe some sort of little, you know, impulse wave up. I got to get a 5 up and a 3 down to at least have confidence that there's some upside to come after the initial bounce, right? Let's just drop that down a bit. Looking for some sort of convincing reversal to add anything to the long position. Okay, what else? Anything else to add there? Oh yes, there's a Federal Reserve meeting next week. I believe the actual results or the Fed decision comes out on Wednesday along with the press conference. So how that correlates with the market action, it's always a toss-up, but maybe we start a bounce and continue the bounce with that Fed decision, or maybe we don't even start bouncing until that Fed day comes out. Everyone's reluctant to make a move until after the Fed makes their announcement. It's hard to say, but I think beginning to middle of next week, I think you likely start to see a significant bounce materialize. All right, I'll try and get some more material out on the serial trading video series. I'll try and make another one tomorrow. The next topic, it's a little more time consuming. That's why it's been taking longer, but I'm trying to make it good for you. Until the next video, Serial Trader signing off.